good. All right, so real quick, our agenda today, we're just going to have a brief intro and overview of accounting. We're then going to move into the initial setup and processes and procedures that are very important to have as part of your accounting function. We're then going to touch on strategic plans and budgets, moving from that into our financial statements and financial package. Then moving on to financial ratios and how they are so important to help you see your financial health of your company. And we'll wrap it up and have hopefully some time for Q&A at the end. So what is accounting? And kind of like the news channels are always like the who, what, why, where, when, and how. That's what we're going to touch on just really briefly now about accounting. So what is accounting? Accounting is very simply the language of business. It's how your company is going to talk to you and tell you how it's performing, because obviously your business can't speak in any other way. If you've ever been around accountants or you've been in your accounting function yourself, you know we have our own language. We talk in a lot of acronyms. We use words that mean something to normal folks and mean something totally different to accountants. So there is a terminology and vocabulary of accounting that's key. Why is accounting important? Again, it's how your business communicates with you and any end user that may need your accounting records. This could be you know, the IRS, a bank, any potential investor. It just is super important to have a clean accounting function. And it's going to track all of your business details. You're not going to have to guess how you're doing. If your accounting transactions are recorded, you're going to know how your business is performing. So who are the users of the accounting system and records? You, as the business owner. Other employees or department heads, banks, the IRS, auditors, pretty much anyone that, that would need to see your financial statements or other accounting records. If you're applying for a loan, if you have a dreaded audit, they're going to require accounting records. Where does that accounting function reside? So this one can kind of reside in a couple different places. One, you could have an internal accounting function within your own finance team, and that function could be as small as one person, or you could have a team of accountants, 20, 30, 50 people, depending on how complex your structure is. You could also outsource this function. There are firms and companies that can provide your accounting function for you, and that kind of gives you that peace of mind because you know that accounting experts are going to be helping your business. And how is the accounting function completed? Transactions are processed in the accounting system. Financials are prepared and analyzed, and key performance indicators or ratios are calculated, and you can see how your business has done. The accounting function also is responsible for maintaining the history and support for your business and having that kind of at your fingertips if you ever need it. So we're going to jump right in. These are the top essentials for setting up your accounting function, or if your accounting function is already set up, how you might be able to make it more efficient, streamline it, make it better, make your accounting function work for you. Because at the end of the day, your company needs to be for you. You want your accounting function to support you and your business. The first thing is always going to be you need to select and set up a simple accounting system. You want to make sure that whatever one you select, it's going to be cost effective for your business. Say you're a global company, you have 15 different locations all around the world. Using Excel to do your accounting system, maybe not the best idea because you're going to have things like foreign currency translation, intercompany allocations, probably some pretty complex accounting that using simple Excel spreadsheets, not going to do it for you. A good example of what a really good accounting system is QuickBooks. So QuickBooks is simple and cost effective, yet it has come a long way over the past several years to give you more of those bells and whistles that usually the larger and more expensive accounting systems were the only ones to offer. QuickBooks has both a desktop application as well as an online web version. And that has obviously become key during this pandemic when so many people have been forced to work remote. Your accounting function can still stay right on target with everything if you have an accounting system that has a web option.
Noelle, may I make a comment just
Sure.
briefly? So I think the information that you're providing is so important. I talk to a lot of entrepreneurs and new business owners, and they have wonderful ideas. And I love working with entrepreneurs because they're excited, they make things happen. It's a great thing to be. And you don't want to be the sort of the glass of cold water that says, okay, that's great. Let's really talk about, the processes and things that are going to be essential to your business ultimately being successful. You can have a wonderful idea, right? But if you don't spend a little time and sometimes, concentrate on some of these nuts and bolts, it can have an impact on your business. And where I see this come to roost, just a couple of brief examples. One, right now, I'm involved in a piece of litigation involving folks who are running a business and maybe didn't necessarily have these types of financials in line. And so they can't tell the story about what's going on with their business to the board of directors or to the shareholders, and ended up losing their job because they didn't have their numbers together to tell their story, right?
Mm-hmm.
I also work with businesses that are buying, or I help people buy and sell businesses, and especially business owners who are looking to do a succession plan or market their business, or take on investors or talk to a bank about a loan, right? You don't want your numbers to get in the way of getting the loan or selling the business, and not having your information put together. That in and of itself can prevent you from selling your business when you're trying to tell another person, pay me money for my business, and you can't explain what your business is doing from a dollars and cents standpoint.
Yes.
So this is sort of like super nuts and bolts stuff that might seem boring, but you got to do it, right? You got to do it. It's like sending a running back onto the field without tennis shoes, right? You need to have tennis shoes on or you're going nowhere, right?
Yes.
So sorry.
Yes,
So, I hope that's
absolutely.
okay.
No, those are all good things. Yeah, I mean, again, you want your business to communicate with you because that's the only way you know how you're doing, and it's the only way external folks to your business are going to know how you're doing. So within your accounting system, the first piece you're going to set up is your chart of accounts. This is the core of your system. This represents your general ledger. So your general ledger is the overall accounting backbone. Everything gets ultimately recorded to the general ledger, and this is where your financials are going to be prepared from. This is your key to your overall company. And general ledger accounts are the records that are used to sort, store, and summarize your company's transactions. You arrange your accounts in a logical format. And when I say logical, I mean accounting logical, not someone, the typical logical. There is an accounting logical way to organize your chart of accounts. You have your asset, your liability, revenue, expense, and equity. You want to group together accounts of like mind. So all your assets are going to be grouped together. Say you're using a 4-digit numerical code as your structure for your account nomenclature. All your assets could be the thousands, from 1,000 to 1,999. That way you know if you have an account that starts with a 2, more than likely it's not going to be an asset account. And if you see it in assets, there's probably something wrong, and your system is trying to tell you, hey, back up a bit, maybe there's something a little off here. To go a little bit more granular, just because again, this is accounting basics, accounting 101, assets are considered to be items that your business owns. They have a value to them. Examples of this would be your accounts receivable. You've done a job for someone and they haven't yet paid you in cash. You have an amount that is owed to you and eventually will turn into cash from your customer. Another example would be fixed assets. You have an excavator or a fleet of vehicles to help you do your projects. Those have value. It is something the business owns. And the top one, and I've been around the accounting world for quite a number of years now, and I've heard this a million times, cash is king. I don't see that ever changing. Cash is your ultimate asset. You want cash. You want to have cash on hand to be able to invest in your company, to grow your company, and just to keep your company afloat. Cash is super, super important. The next section, liabilities. So these would be items that your business owes. Your assets, you own them. Your liabilities, you owe them. A third party that you have purchased goods or services from and they have provided you an invoice, that's an accounts payable liability. You owe someone something for a service or good they have provided. You also may need to accrue a liability. This could be where you have consumed a service from a third party. They haven't yet given you an invoice yet, but you need to match your expenses and your revenue. When you recognize revenue, you need to recognize the expenses that occur in that same time period. So if there's a service that you've consumed in that month, you want to make sure that you accrue that liability because it will be an amount that you owe. And a final example of a liability would be any kind of debt you may have. If you have an outstanding loan with your bank or borrowings on a line of credit or a note payable on a new truck for your business. Again, you owe a third party an amount. The next section is revenue. This is what everyone wants. Everyone wants tons of revenue. This is the sales to your customers. You've invoiced a customer for a service or good that you have sold them. And you want that number to always be a positive, good number. Your expenses are the costs you've incurred to run your business. So you could have payroll. Most people are going to have payroll, insurance, pretty much any expense that you are paying someone or something to run the business to make sure it keeps going forward. And finally, your equity section. This is the portion of your company that is owned. It represents an accumulation of the business's earnings through the life of the business, as well as any capital. So if you've had investors invest money into your business, you're going to have, some capital, some additional paid-in capital, some stock. That's all showing how much, what of your business is owned. The next thing that's super important, you need to keep your personal and business expenses separate. This is key. You want to have
testify, I say, testify.
Yes, this is, oh goodness. You need to ensure there are separate bank accounts for your business. Best case scenario, there's maybe some confusion on what is personal or business. Worst case, you could be in a world of hurt. Lawsuits, tax penalties, it could drag on for years. They could attach liens to you personally. Not a good situation. So keep those personal expenses out of the business. They have nothing to do with it.
I already know that.
The next one is you need to consider your tax obligations. Do your due diligence to understand all your federal, state, local tax obligations. It's not just the IRS that comes knocking on your door. It's a lot of other taxes that are owed throughout the years, and sometimes it can be overwhelming. You also need to consider any potential fees or other registration items if they're applicable. Some states that you register in have an annual fee. They could have different taxes that maybe even if you don't have any revenue or net income, you still owe a kind of a floor amount. So you want to make sure you understand all of that. You need to stay on top of your payroll tax filings, your 1099s, your quarterly taxes. These are all very, very key items. Again, these can get you in a lot of trouble if you're not filing on time or not filing correctly. Having an outside tax professional is really the best way to make sure you stay on top of your tax obligations. If you followed any of the news over the last 2 years, you've seen tax laws change all the time, depending on which administration is in office, depending on what your local governments do or your state governments. That tax code never stays the same. People are always touching it, always trying to make it better or make it worse, or who knows. Tax professionals, that's part of their job, to know and understand that code and to know and understand the changes that relate to it. And if you have someone like that in your back pocket, in your corner, kind of fighting that fight for you, it's going to make it a lot easier to stay on top of your tax obligations and not open your company up to issues.
Noelle, just a quick note here to put a little flesh on that. Just in the last week and a half, dealing with some fellows who just started a new construction business, and they did not know what they were doing regarding payroll tax related matters, and they had employees in a variety of states, so they were started out a little bit complicated. They didn't file timely, and when they did file, they filed incorrectly, and they got that love letter that nobody wants to get from the IRS that says, we've liened your assets, you owe us interest and penalties. That ultimately could end up being personal liabilities for them as well on trustee related taxes that you're supposed to collect and remit to the government. And on the other end of that, the evil Mike Fiffick is just filing suit against a business owner on a wage payment and collection law on behalf of some employees. And they are owed wages that they weren't paid. And it's business owners need to know that they are personally liable for unpaid wages and unpaid payroll tax obligations. They can be liable for all of that for their employers. So those are nasty things that you don't want to learn by getting a lawsuit filed against you, for sure.
Absolutely. Yes. This is a really, really key thing. You want to maintain records and support for all of your general ledger accounts, all of your assets, liabilities, revenue, and expenses. This is going to help you for audits, your tax prep. Anytime your business records are requested, it's not going to be a big giant search for them. You're going to your bank to request maybe an extension on your line of credit or an increase on your line of credit. They're going to want your accounting records to support, can they justify this increase or can they justify this extension? And they want those pretty quickly. They're not going to give you a month or two to turn this around to them. And you want your decision on whether or not your line of credit can be extended or increased pretty quickly. So having your records and support right there for you is very important. Electronic storage is obviously the way to go right now. For one thing, it keeps you from being buried under mounds of paper, and it just has much better organization for you and your employees. A lot of systems, you're able to scan and attach right to the transaction. So it's really easy. If someone has a question, you drill right into that transaction in your accounting system that you have set up perfectly with your chart of accounts. And you can point right to the detail, right to that, which is super helpful and just makes everyone's lives so much easier. At this time, it's also good to determine your document retention policy. So the official definition, we'll get some boring words in here. It establishes and describes how a company expects its employees to manage company data from creation through destruction. Simple terms, how long are you keeping your stuff? The SBA and IRS and various other organizations have a lot of great guidelines out there for you to search through. They kind of give you some information on what maybe does need to be kept in perpetuity and what can you maybe keep for just 2 or 3 years. That's going to save you on storage costs. If you do have paper documents and you have to get them into offsite storage, as well as electronic storage, just in case, you know, your IT costs, if you're trying to rein those in a bit, that could help. Next, we're going to move into what kind of systems, processes, and procedures are important to have in place. First one, you need to make sure that your accounts payable system is set up correctly for you to process payments. Formalizing your AP system allows you to maximize cash flow. Again, cash is king. You want that cash flow maximized. And it's going to allow you to create essential financial reports like AP agings. So AP agings are going to help you analyze and monitor your business, determine maybe which vendors are you not paying timely enough, or maybe you forgot about an invoice, it got processed and no one ever cut the check for it. You didn't mean that to happen. If you have a formalized process, you'll be able to determine if you have any of those types of issues. You want to make sure your AP schedule is created, and you want to stay on track with those terms that you've created for the schedule. For example, you decide you're going to pay your vendors within 45 days. You want to stick to that. When you run that AP aging, you never want to see any invoice that goes past that 45 days. Obviously, you might have some discrepancies or issues like that. There's going to be those one-off issues all the time, but for the most part, you want to stick to your plan. This is going to help build your reputation of financial stability and security. That's going to allow you to work with the vendors that are the cream of the crop. And those vendors could then in turn maybe offer you some more generous payment terms, like early pay discounts, maybe moving you up to the head of the line if there's an item that tends to be out of stock, maybe getting you even some better shipping rates. You want to have very positive relationships with your vendors and with the good vendors, the ones that you can rely on and they see you as a business partner. On the flip side, you also need an accounts receivable system set up properly to be able to collect your receipts. So again, improving cash collections, super important. You're also then going to be able to create AR agings, and that's going to allow you to see which customers maybe aren't paying, which customers are slow payers, which customers really knock it out of the park and you never have any issues with. All of those are really important things to make sure your cash flow is maximized from both an AP and AR perspective. At this point, you also want to establish credit guidelines and create collection timelines so your customers know what is expected. A formal documentation process, like a page or two that just kind of lists out your credit terms that you provide to your customers with each project, or if you have a master service agreement or something with a customer or a client, have those in place. They know when you expect payment. They know if you're going to charge a finance charge if payment is late. Those are all, again, very important things to have for your company. You want that cash. You want to turn those sales into cash as quickly as possible. You also at this time need to set up other internal processes and procedures. These are all the procedures that are going to help keep your business organized, like capitalization policies, internal controls to ensure proper checks and balances and segregation of duties, any other key functionary of the business. You want to have these documented and you want to test them and review them on at least an annual basis.
Noah, let me jump in real quick. There was a question in the chat over here. Is it good to obtain 1099 employees, and how does it affect company taxes? That was from Deborah.
Okay. It's okay to have 1099 employees. Yeah, so they're not actually an employee of your organization. They are considered an independent contractor. And you pay them with a 1099 miscellaneous. And what that does is it protects the company from employee or payroll related taxes. So you as ABC Corp are no longer responsible then for Diane Smith, who's an independent contractor. She can perform work for you, but Diane is going to be personally responsible for her payroll taxes. She'll get a 1099 from you each year, and then on her personal tax return, she will treat it as her wages. But you get the benefit of having consultant expense or independent contractor expense as a legitimate business deduction for your company. Does
Just,
that kind of answer
just be careful there. If I'm a business owner, that sounds like a wonderful way to go, but there are rules that must be followed as far as the definition of what an independent contractor is.
Yes.
I've had clients where, they had 20 employees and said, yeah, okay, I don't have to worry about payroll taxes, let them worry about it and all this. And they put them all on 1099s, and they got into a lot of trouble because, again, there's basically like a 20-question checklist
Yes.
that you have to follow to meet the definition of an independent contractor. You just can't say, it's kind of like hourly and salary. You just can't say, well, it'd be easier to treat them as an hourly employee or salary. It's easier to treat them as an independent contractor as opposed to employee. So you've got to be careful that you follow those rules and don't just arbitrarily say, okay, I'm going to treat my employees as 1099.
Yeah, I'll echo Rich's suggestion there. I mean, misclassification of workers is a big wage and hour issue out there, and employment-related claims is a growing area of claimants' work out there in the bar, and so attorneys are looking for businesses that engage in misclassification. And I have yet to run into a business that knows all of the wage and hour and labor laws. They're very complex and convoluted. It's very common to have misunderstandings about paying employees. That might seem crazy, but it's very complicated. Misclassification is a big issue. Wage and hour claims are big, and the important thing for business owners to realize is that, number one, you can be potentially personally liable for unpaid wages and misclassification issues. And secondly, if a lawyer sues you, almost every wage claim statute entitles the winner to have their attorney's fees paid. So if you're defending one of those claims, you're paying your lawyer as a business owner, and you're potentially paying the employee's lawyer as well. So business owners have a lot at stake at getting those classification issues right and paying their employees correctly.
And to follow up on Mike's comment, regardless of how large or small the damages awarded may be, to Mike's point, the employer could be on the hook for the employee's attorney costs, which could be significantly more than what the actual award ends up being.
Yes. Yeah. I mean, at the end of the day, this is a great example of what you would want to have a conversation with an HR professional, with someone that really understands those laws, an attorney, your CPA, before making any overall decisions.
It's definitely reinforces the value of a Legal Shield business membership and putting businesses together with provider law firms so they can call and have in essence, a consultant on board to talk about these things. So very important.
Yes, absolutely. The overall thing that's most important for setting up your accounting function is it's so critical to be on the front end as much as possible. It's much easier to take the time initially to ask the questions, to ensure you're setting up things correctly, to reach out and seek guidance from the professionals, attorneys, CPAs, whoever else that might be able to provide help, tax professionals, instead of trying to fix problems down the road. Because down the road, when problems pop, they usually pop with a monetary component to them, where, again, lawsuits, tax liabilities, personal liens, and those things are always ugly, and it's better just to kind of stay away from them if at all possible. And just to touch real quick on some of the common mistakes, again, no focus at the beginning. Setup is done incorrectly. Those are two key things. You have to be focused. You have to understand, again, this isn't the most exciting stuff in the world to do, but it is super critical for your business to succeed. Other mistakes that could occur, you could lack review, lack reconciliations, lack internal controls. These are all problems that could pop up if you don't have your processes and procedures in place and have those processes and procedures documented so that people understand their individual responsibilities. so that you can see from your company's overall perspective, does one person maybe have too much power? Can they process cash deposits, process cash payments, reconcile the bank accounts, and prepare the financials? That's a little scary because that person could then potentially see their opportunity to embezzle money or to do some maybe not so good things to you and your company. You don't want to leave those windows open. And another common mistake would be the failure to budget or plan for your business. You need to kind of know what your business is going to do, what are your long-term and short-term goals, and have a plan in place to reach them. So this will be a perfect segue into our next section. So I'm going to stop my screen share here real quick, if it allows me to. Matt, I'm having trouble stopping my screen share. Thank you. Very good. Okay. So in the chat pod, if you want to go ahead and...
Your screen's still up.
Okay. Sorry about this.
It's okay. You can just use the chat pod. It's okay.
Okay. In the chat pod, if you just want to put a Y for yes or an N for no on, have you been involved in either the strategic planning or the budgeting process, either with your current place or any prior lives that you may have had? Okay, good mix here. Okay. All right, so we're going to move on then. It seems like we have a nice mix. Can everyone still see now the strategic planning slide? Perfect. Okay. So strategic planning, what is it? It's the process of documenting and establishing a direction for your business. It is long-term in nature. So this isn't just, what do I want to do in 6 months? This is, what do I want my mission of my business? What are the overall values of my business? Where do I see this growing in 5, 10, 20 years? This is your why did you start the business is essentially what you want to include in your strategic plan. Having this in place is going to help your business respond to both challenges and opportunities. There's a lot that we can't control in this world. If you have a documented plan of what you hope to accomplish and it aligns with your overall mission of your business, you're going to be able to take those challenges that the world throws at you and turn those into opportunities because you've taken that time to put that plan in place. You have that foresight. Things aren't going to just hit you sideways and potentially turn your company completely upside down and have it go away. It gives you a place to record that mission. What action plans are you going to do but keeping your mission in place? There's 5 key elements that you want to be sure that you include in your strategic plan. Your vision, the overall vision for your company. Your values. What is the mission of your company? What values are you hoping to keep intact with operating your business? You need to have clearly defined outcomes. What do you hope to do? How do you hope to do it? Put some dollars and key information in there. You want to make sure there's accountability. You have to hold people responsible and yourself responsible for what you want your business to do. And the final one is your KPIs, your key performance indicators. You need to have that target that you're tracking towards. Otherwise, it's just a bunch of words on a piece of paper. You need to have a measurable target that you're going to be able to determine, am I meeting my ultimate goal? Am I trending on the path to get me to my ultimate goal? So your strategic plan is your overall company picture and what you hope to do. Your budget is a layer in that. Your budget is what you anticipate your cash inflows and outflows for your business that you expect to generate over a given time period. Your budgets have to line up with your overall strategic plan, your overall vision or your big picture for your company. Your budget has to line up with that. There are a bunch of different ways to do budgets, and we're already at 9:40. The morning is just going by so quickly for me. I don't know if the rest of you can say the same. So we're just going to cover these briefly. You know, you can do a traditional budget where you're going to use that prior year as your guide and any known factors of increases or decreases. If you plan to exit a certain market, if you expect some customer contraction, increases in your insurance costs, things like that. That's typically the way companies do budgets.
Noel, is the zero-based budget the ones that a nonprofit organization would use? Is that what that means?
Typically, yes. They do though. So in the nonprofits that I have been working with, and I did not have a lot of nonprofit experience before I came to Donnelly Boland, but I'm getting a lot of it now, and it's I'm learning a ton in that world. But actually, I know you were joking about it, but they do. It's so much easier for them to start with no bias and no expectations and build it from the ground, from zero. Instead of trying to look at what happened last year. Because with nonprofits, there are so many just external factors. They can control a lot of the internal stuff, but there's so many more external factors that the pandemic, for example, you know, it really helped a lot of nonprofits because people saw that there was a great need. And so people were being very giving. So a lot of nonprofits ended up not coming out ahead, but definitely felt the support to provide that extra need. So all good stuff. Your incremental is very similar to your traditional. It's just you're not considering anything but inflation. This is gonna be your easiest and quickest budget, but it's also probably going to lack a lot of the insight you need to have a solid budget. Your zero-based, you know, we just briefly talked about it. You are taking it from nothing, ignoring any prior information, ignoring any bias you might have going into the budget process. You are just looking at what do I expect to do in this given time frame, typically for the next year. Activity-based is going to be your most complicated. You're going to analyze all the activities that drive the cost of your business, determine all of their individual impacts, and flow that all together. It's going to be your most time consuming. It's also going to give you your most informative budget. Budgets are important for a bunch of reasons. Communication is going to be improved across your whole business, all your business sectors, because you will need input from all of your departments and cost centers to prepare the best budget. It provides a common goal. So all of your employees, all your department heads, everyone within your organization is working to that same target, which is, you know, it's always good to have commonality. It's going to provide accountability. There's going to be a clean sense of ownership of what you expect to occur over a given time frame and what individuals need to do to hit those goals. Again, it gives you that measurable target. You can track towards it. You can analyze versus it. These are concrete numbers to help you determine, are you doing what you need to do to hit those goals? It's also going to help you control cash flow throughout the year. You'll be able to determine, do we need to maybe pull back on some of our payables because, you know, we expect this to be a lighter quarter. It's going to allow you to know when maybe you can make capital improvements to your business because you have that measurable target. And again, it's considering both internal and external factors to allow you to see those challenges and really turn them into opportunities to grow your business or better your business. All right, we're running really, really close on time, so I definitely want to just cover financial statements. You know, your financial statements are going to be your formal records of the financial activities and position of the business. They're important because they're going to represent the performance of your overall business. Financial information, it's going to be presented in a very structured format. It's going to be easy to compare that and to understand it. Again, this is your business talking back to you. Accounting put all that language in there into your accounting system for these reports to be produced so you know the story of your business. 4 main financial statements: your income statement, your balance sheet, your cash flow statement, and your statement of changes in equity. This is my favorite part. I said I love accounting. This is where I just love it. This is what gets me very, very happy about accounting. The financial statement package all ties. It all balances. If it's not balancing, there's a problem somewhere. And this gives you just a complete picture into your business and really expresses how the business is doing. Where are your problem areas? Where are you performing things just spectacularly and knocking it out of the park? This is just to me, this is what we, work towards in accounting: clean, crisp, accurate financial statements. So your income statement is a measure of your company's financial performance. It's going to represent earnings through a specific period of time. Maybe you have an income statement you're running for an annual period. It could be quarterly. It could be for a specific month. The formula to determine your income statement is your revenues minus your expenses equals your net income or net loss. Obviously, you want that net income. You want your revenues to exceed your expenses. For taxes, maybe not so much if you don't want to pay taxes, but you want to make sure that it is all legitimate business deductions that you are taking. Again, no personal expenses, no non-business related deductions that you should not be including. Your balance sheet is the financial health of your company. It's going to represent what a company owns versus what a company owes. The formula to prepare this statement is all of your assets on one side of that equal sign are going to equal your liabilities plus your equity. So all of the good things that you own in a company, your cash, your AR, your fixed assets, has to equal what do you owe and what is the ownership of your company at that point in time. Excuse me. The cash flow statement, this is, sorry about that. This is my absolute favorite of all the financial statements. This is your cash management of your company. It's going to represent the cash inflows and outflows over a specific period of time. It's going to show the sources of cash, how you used your cash, and the change in your cash balance. It's broken out very cleanly. You have your operating section at the top. So what, from your business operations standpoint, did your company make money or did you have to spend money to support your operations? Your next section is your investing. How did you invest in your business? Did you invest a lot in capital improvements? So there were some uses of cash in that section. Or did you have a lot of fixed assets that weren't really providing a lot of revenue to your business? Did you sell them maybe in this year and it gave you a source of cash? And the final section of the cash flow statement is your investing. This is where your debt, kind of anything that you've had to finance to run your business is going to be here. Is that going to be an inflow for you or an outflow? And the last one of the main financial statements is your statement of changes in equity. This represents your overall company ownership position. It's going to illustrate if your business has accumulated positive or negative equity. And it's going to show those changes in equity. If you've been able to accumulate additional equity because you're having a stellar year and your net income is through the roof, it's going to give you additional equity in that business.
Oh, well, one of the things that I encourage business owners to do when you're talking about financial statements is it's important to have a great banking relationship and to view that as a business partner relationship. But I think it's a useful thing for business owners to understand how a business understands you and looks at you through your financial statements, so that you know and have better idea of what you want to present to a lender.
Yes.
And anticipate the questions that they're going to ask and have answers for them whenever you're looking to borrow. That's an important, that's going to be something that's important in the life cycle of many businesses. When they want to go borrow money, they need to understand how businesses or banks look at them, right?
Yes. Yes, absolutely. All good stuff there. And we're going to just briefly cover financial ratios. So in line with the financial statements, financial ratios are a business insight tool. You're going to be able to compare certain analyses here. It's going to provide meaningful information on your company performance, whether it's to management or your bank or outside investors potentially. Financial ratios kind of give an indicator of how your company is performing in the various ways. There are 5 main financial ratios. You have liquidity ratios. It's the number 1 on the slide. Liquidity ratios help determine a company's ability to pay off their current debt obligations without raising external capital. You have your working capital ratios, which also is another measure of liquidity, but it's the business's ability to meet its payment obligations as they fall due. Your asset usage ratios, how efficient is your business using its assets to turn that into revenue, to turn it into money? Your efficiency ratios measure your ability to use its assets and manage its liabilities effectively in that current period or in the short term. And finally, your profitability ratios, it's going to show how much profit a business is earning as a percentage of a certain key element. There are 5 financial ratios that I think if you're only going to do a few, so there's 50 or 100 different ratios that you could potentially really dig into, and they all serve a slightly different purpose. The top 5 that I think are the most critical, that if you're going to do any, these are the 5 you definitely want to have in your back pocket. The first one's your debt to equity. This is going to indicate the proportion of equity and debt used by the company to finance its assets. So you see the formula on the slide is your total liabilities divided by your total equity. This really should never be higher than 2.0. Lower debt to equity ratios are going to indicate a stronger company because you're not relying on debt in order to finance your company. The current ratio or the quick ratio is the next one that is super important. The current ratio, as you see in the formula on the slide, is your current assets divided by your current liabilities. To change this to the quick ratio, you remove inventory. The thought behind that is typically if you have inventory, it's going to take longer for that to turn into revenue in your cycle. That's not going to be turned over quite as quickly because obviously inventory kind of sits on your shelf a bit or in your warehouse a bit before a customer is going to buy it. These ratios estimate the ability of a company to pay back its short-term obligations. This can also be known as the cash asset ratio, the cash ratio, or liquidity ratio. A higher ratio indicates you have a higher capability to pay back your debt. A good current ratio is going to be between 1.2 and 2.0. This is indicating you have nearly double the assets to cover your current liabilities, which is a positive thing. If you have a ratio of less than 1, you don't have the liquidity to even pay your current liabilities. That's not going to indicate a very strong performance to the bank, to a potential investor. So you want to make sure this is at least in that 1.2 to 2.0 range. The next one I find to be very important is your total assets turnover. You're going to take your revenue and divide by average total assets. This one is telling you how efficient are you at using your assets to generate revenue. The higher this ratio, the more efficient you are. The lower the ratio, obviously, the assets that you have on hand, you're not efficiently using those to create revenue or sales. Return on equity, you're going to take your net income and divide by total equity. This is the measure of a management's ability to generate income from the equity available to it. This is going to be presented as a percentage, and ROEs in the 15 to 20% range are generally considered good. So that means that you are generating 15 to 20% return on all of your equity into your actual net income. And the last one that I think is super, super key is your net profit margin. This, you would take your net profit and divide by your net sales. This is the efficiency of a company, measuring the efficiency of a company and its cost control. A higher net profit margin, more of your revenue dollars are making it to that bottom line. You're converting more of your revenue into actual profit instead of it getting eaten up by costs to run your business. And really, to sum it up, accounting is really the backbone of any business. It's important to each and every style of business, each and every industry, and it allows your business to communicate with you and tell your business's story of what it's been doing while you've had that business in existence. Whew, that's it. Any more questions?
People can feel free to use the chat for questions or also just talk. And that'll be fine either way.
No, well, I think Jillian had a question here in the chat. As a new entrepreneur, zero-based is the budget you would expect them to use? I think that's the question. Do you see it in there?
Yes, I see it. I would say yes. If you are starting out fresh, it's probably best for you to do a zero-based. Don't think of any prior company or prior information. Just start from scratch. The other one you could possibly do is activity-based, but that one would be a little bit hard because you don't have any established activities necessarily. It would be more ones you think are going to generate the costs. So zero-based, I would absolutely start there. Yes, the thrill of zero, Benita. I love it. That is awesome. Thank you. Anyone else have any questions? I know accounting is not the most fun thing for a lot of people, but seriously, I do love it. Anyone that interacts with me on a daily basis, Matt can attest to this. When
I'll vouch for that. She loves it. Okay, she gets all excited.
I do. So I do apologize if I talked too fast or did anything weird like that. Sometimes I can't control my excitement.
Gillian, if you wanted to ask a question, that's fine. I saw you raised your hand.
Yeah, I didn't. It wasn't so much a question as an observation. As a new, I've been in the W-2 world since God was a boy, and now I'm doing an entrepreneur thing with Legal Shield, and even though a lot of this was way over my head and it didn't apply to me, what I really got out of this, and I'm really glad I'm up at 5 o'clock right now, is that when I go to, because B2B is my, small business is my jam. So when I'm talking to people, I actually now have a little bit of an idea. I would never try and advise them in anything, but it just gave me so many different talking points that I could approach them with what I know. And then I can say, this is what, are you thinking about these things, without even mentioning what we just talked about, but I can direct them into a much better plan in our services to meet them. Make sense?
That is perfect. I'm so glad to hear it. That's fabulous. I'm glad that you use this as a resource tool.
Absolutely, and for everybody that is in Legal Shield and they're selling into the B2B world, one of the reasons why we are offering these educational webinars, and especially with business partners like Donnelly Bolin and Associates, is to present you with an opportunity to invite your customers or your prospective customers to attend. And if you follow any type of a client service model, you're looking for opportunities to connect with customers and prospects that may not necessarily be just a salesy type of a call. Hopefully you realize we've got some great substance to offer here to you, great presenters as well, lots of valuable information, and you'd feel comfortable inviting a prospect or a current business owner to attend the seminar. I'd say, hey, reach out, got some information here, maybe it'll be useful for you. Feel free to attend. It's complimentary and really being presented with the idea of small businesses and small businesses that are connected through Legal Shield. So lots of great information, and we're going to continue offering these webinars with Donnelly Boland and Associates, as well as some other business partners going forward into 2021. So please keep an eye out and follow us on our social media pages at FIFIC Law Group, and you'll certainly see invitations for future events.
And I just wanted to mention, I work in the communications department at Donnelly Boland. You're actually going to be receiving an email from me after this. It's a quick little survey, and it's an opportunity for you to say what you like, what you didn't like, what you'd like to see in the future. Because right now, we've been working with FIFIC Law Group, thinking about future seminars, and we have a bunch of ideas, but ultimately it comes down to what you all want. So if you have ideas of things that you'd like to see in the future, more accounting or HR or IT or communications and marketing, whatever it is you'd like to see, we'd really like to hear from you. So we'd appreciate that. Also, I had several questions. Some were sent directly to me somewhere on the chat about recording this, and this was recorded. And what I'll do is I will have a version of it, and then I will send that out in that email. So be on the lookout from that. My name is Matt, and you'll be receiving it from M. Fazio.
And Matt, I did see that there was a question from Deborah Crowley. If you were looking for a new accountant, what credentials are we to look for? Definitely you want to find a firm or a company that is established, has CPAs on staff, has done this type of work before. Those are all key things that you want to look for in an accountant. If they're established and have been around, you know that they exist for a reason. You know that they're doing a good job. They have your best interests in mind. And if they have CPAs on staff, those are the ones that we have to do 80 hours of education every 2 years. And it's even more boring than this. So
It's probably,
we definitely...
yeah, that's a great question to ask. I mean, that would be an interesting thing, like what 5 questions should you ask your next potential accountant, to figure out whether this is going to be a good match for you. Because it has to be a match, right? It has to be a good match.
Definitely.
And just to
what's
keep in
their
mind,
expertise? What industries, what businesses is their sweet spot?
Mm-hmm.
yeah. And like Mike already said, this is not a sales pitch for us. We're trying to do this as, a way to promote other small businesses. But if anyone is looking for accounting services, Donnelly Boland does provide those. So when I reach out to you, you have my contact information. If you ever have questions about our services, you can check out our website or just ask me directly. We'd love to be able to help people or answer questions that you have.
Yeah, I encourage small businesses. Yeah, I encourage small businesses to think about their business relationships with an attorney or with a financial services company like Donnelly Boland as sort of a de facto board of directors, right? They don't just do the numbers, they see everybody else's numbers. And if they're in an industry that you're in, that they have an expertise in that regard, they can provide you some valuable advice about what's going on in the marketplace that can inform decisions that you make about your business. So, don't think of them as just number crunchers, right? Or bean counters, or, whatever those other disparaging comments are about accountants. I probably know them all like I know them about lawyers, but, they're business partners, and business owners should really think about them that way.
Definitely.
2 more people raised their hand, Gillian and Deborah. How about Deborah? We can go with you first.
Okay, Deborah George, because
Yep.
there's Deborah Crowley as well.
Yeah, Deborah George it is.
We like all
Okay,
Debras.
thank you so much. This was absolutely incredible. As a matter of fact, I am with Legal Shield, and I sold a small business plan, and this was the kind of information one of my client was looking for. Unfortunately, I didn't get this information until right before. But at some point, are you going to incorporate the different types of entities, like the difference between the sole proprietorship, S Corp, C Corp, the LLCs, and how it plays into also the accounting? Besides, there's so many aspects of those different things, because I think people just automatically say, oh, I've got to get an LLC. And they don't think about all the other different, entities that can be formed.
Deborah, it's funny that you mentioned it. On this little note right here, I actually wrote to have before March of next year, before March 15th. So maybe in February, I think it would be a great time to not only talk about business entities and the tax ramifications, but also what an S election means for a business, because March 15th is a relevant date in the calendar year for S elections for businesses. And there's a lot of misunderstanding about there is no such thing as an S corporation, right? I mean, that doesn't exist. It's a corporation that has an S election for a tax status. So we can talk a lot about that. Thank you for that idea. I'd like to say
Yeah.
great minds think alike, but I would be doing you a dishonor.
Oh, no, but thank you. Just appreciate it. I'm a former business broker and business consultant, and it's amazing when I talk to even business, everybody just thinks, oh, I should form an LLC. They don't even realize there are different types of LLCs. And I think that for a lot of people, getting this information would be so helpful. And then Noelle, how it really impacts the, how we do our accounting and the taxes and everything.
Definitely.
Totally.
And then Gillian,
Thank you. Thank you for doing all of this. We've been with Legal Shield for 22 years. So I just appreciate all that you've done.
You're welcome.
I mean, I keep saying to people, I'm still as passionate about it now, even maybe more so than 22 years ago.
That's
Wonderful.
I like that passion.
Gillian, did you have another question?
Well, I'm actually another statement or maybe another question. I don't know. First of all, Noelle, that was amazing. I love your passion about accounting. Who knew? I was like, I actually want to sit down and talk to her about accounting. She's so passionate about it. I'm like, really? I know
you.
That's so weird to me, but I love that. So my other question was, because this is so new, I don't know what I don't know, right? So I have these pieces of paper everywhere, my taxes, all the rest of it. And before I've not started making significant money yet. So I'm like, do I need to put these systems in place now before money starts coming in, or do I wait until
Yes, you should at least have things kind of sketched out. And, you want to have an accounting system. Again, it can be a very basic accounting system. QuickBooks works essentially like a checkbook. So a lot of people kind of, maybe not so much if you get to someone that's under 20 or 25 years old, but most people have seen a checkbook and have balanced a checkbook in their lives. And it's very cost effective. So you wouldn't be putting a lot of cash out the door to invest in an accounting system like that. I would say yes, even if you're in the infancy stages, if you are conducting business transactions, you want to have a lot of this in place already. But it doesn't have to be, over the top or extreme. You can have a basic accounting system, a basic chart of accounts, and just processing your day-to-day transactions right in there. Linking it to your bank accounts, linking it to credit cards, maybe if you accept credit cards as payment, linking it to the credit card management system from a customer perspective. Documentation of your business policies, practices, and procedures is key, whether you're at the beginning of your business or nearing the end of your business life cycle.
Okay, so this was really, 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 really helpful. And whatever you do, I'm going to get up at 5 o'clock whenever we're doing this. I'm up 5 o'clock. You will never see me on video, but I will always be amazing. And I can't believe how really this was amazing. And
I'm so glad to hear it. I look forward to sharing mornings with you every time.
Well, thank you again for all of you for joining us this morning. So Matt will be sending that follow-up, so you'll have his contact information, and Noelle, if you would like to have an out-channel conversation with them about whatever it is that you would like. And stay tuned. There will be more coming in the way of educational webinars. So have a great day, everybody. Take care.
Take care.